subscribe to this channel for more videos so that you don't miss any update.
In this video, we are going to explain and demonstrate 4 profitable pullback or retracement trading techniques. A retracement or pullback in a market is an easy theory to explain and comprehend. It is correctly what it sounds like, a period when price retraces back on a latest move, either up or down. Retracements is vital for a number of reasons. They are opportunities to enter the market profitably. They allow for best stop-loss placement and a better risk-reward. A retrace entry is more cautious and conservative, and it is considered as a safer entry. The aim of a trader is to obtain the greatest entry price and manage risk as good as possible, whilst as well increasing returns. The retracement entry is a tool that lets you to do all 3 of these things. This video will cover all aspects of trading retracements, and will aid you know them better, and put them to use, to positively improve your general trading performance. Let us take a look at some of the retrace entry types, so that you can get a clearer look at what they are. Number 1. Retrace or pullback to key level, with price action. Wait for price to retrace or pull back, up or down, to an existing key level, on the daily chart time frame, then watch for any recognizable price action signal. Let me put it this way, any candlestick reversal pattern to form there. In my view, this is the top probability way to trade. We can see how the price crossed the key level, no hesitation, or any price action candlestick reversal pattern formed at the level, so we wait for pullback or retrace to the key level. We can see the price has retraced to the key level and rejected the level with a pin bar. This is a retrace or pullback to key level with price action we are talking about. The price action here is the pin bar at the key level, forming a confluence. As the price is retracing again to the key level, we wait to see if it will form any candlestick reversal pattern at the key level. If it does, we open a short trade again. Yes, the price did form an inside bar candlestick pattern, indicating indecision in the market, so we wait because it could go either way, up or down. Eventually the price collapsed downward. The takeaway here is to wait for price to return to the key level, and watch for opportunity to trade, if there is a reversal signal. Number 2. Retrace or pullback to moving average. Market price has a tendency to pull back to the mean or average price, which is easy to see by putting a moving average on your charts. Shown on this demonstration chart is the 20 exponential moving average, a good short-term moving average to see the trend on the chart. When price pull back to the level of the moving average, one should watch carefully for price action signals developing there to catch a high probability entry and get in on a trending market earlier. As we can see, there was a pullback to the moving average, a pin bar formed and rejected the price level, so the market price collapsed. The market price retraced again, back to the moving average. What do? We wait for price action signal. As we are waiting, bearish engulfing formed at the moving average level. Another good opportunity to enter trade. Mind you, we are looking for short trades, since the market is in a downtrend. We can only trade if there is a pullback to the moving average, and that's the rule. As we can see, the market has moved down. We wait for retrace or pullback to 20 moving average. Another opportunity after a pullback, there was another reversal price action formation, called tweezer candlestick pattern. The market is now in an uptrend, having crossed the 20 moving average. In the uptrend, we can see the market price retraced, and a pin bar formed at the moving average level, another opportunity. Another pullback, and another opportunity. We are looking for buy trades only, since we now in an uptrend. Number 3. 50% area pullback, or retracement. Market price is known to retrace approximately 50% of any big move, and even in short-term moves. This is a known occurrence, and if you look at any chart, you can see it occurs many times. Therefore, we can watch for retracements to these 50% areas, as they will very often be difficult levels for market price to move beyond, and consequently, price moves back in the direction of the initial move from that 50% level. It is not a frequent occurrence, but its occurrence is sufficient to make it an important tool in your retracement trading toolbox. Here we are going to demonstrate how to trade 50% retrace entry. As the market moves up and down, you watch out for a consistent movement and catch its early retracement. You can see there was a consistent market movement. Then insert Fibonacci and apply the 50% line and wait. If the price retraced to the 50% level, which is most likely, you can see it has retraced to the 50% Fibonacci level. Now wait for reversal pattern, like pin bar, or other reversal candlestick patterns, at the 50% level. Here is the pin bar, rejecting the 50% level, for the continuation of the trend. Open a trade. Put your stop loss here. And wait. It is a profitable trade. Trend lines are another well-known pullback tool. The problem is that trend lines often take longer to be confirmed. As we are going to see in our trend line demonstration, a trend line requires 3 contact points to get confirmed. You can connect 2 casual points, but only when you get the third, you are really looking at a trend line. For that reason, the trend line pullback can only be traded at the third, fourth or fifth connection point. When we see lower low, and higher low made by the market price, we draw a trend on top of the lower low, and connect the 2 points. This is the second contact point to the line. We are going to consider it as a trend line, when we see a pullback to the trend line the third time. As the market retraces to the trend line, we wait for opportunity to trade towards the trend. Since we are in a downtrend, we can only place a sell trade. You can see a pin bar rejecting the line, so the market price goes down. Trend lines can work well in addition to other pullback techniques, but as a separate method, the trader may miss many chances when the trend line confirmation takes a long time. Another pullback to the line, and another pin bar for another opportunity.
Subscribe to this channel for more videos so that you don't miss any update. And don't fail to hit the like and share buttons so that your friends can see it.